November 2025. A single biotech ticker, GUTS, has once again crawled back into Wall Street's collective consciousness. Fractyl Health Inc., once a darling of the metabolic revolution, now trades near $1 a share. The headlines call it forgotten. The analysts call it undervalued. Some call it a miracle waiting to happen. And that contradiction, hope clashing with history, is precisely why we're talking about it tonight. For those watching this as a shorts clip, you can find the full uninterrupted version through the link below, where every detail and market perspective unfolds without pause. And stay until the end, because our full technical forecast and trading framework are coming later in this episode, with price targets grounded in both chart structure and narrative risk. To understand Fractyl Health's strange resilience, you have to go back to 2010, to Burlington, Massachusetts, and to a single defiant hypothesis. Its founder, Dr. Harth Rajagopalan, a Harvard-trained cardiologist, asked a question no one else in endocrinology was asking. What if type 2 diabetes doesn't start in the pancreas at all? Conventional wisdom, supported by nearly a century of medical consensus, holds that the disease stems from insufficient insulin production. Rajagopalan saw something different. He believed the real trigger lay higher in the digestive tract, in the duodenum, where years of processed sugar and fat erode mucosal lining. That erosion, he argued, scrambles the gut's hormonal feedback loop and sends false metabolic signals to the pancreas. His answer was not another drug, but a physical reset. From that vision came Revita, a minimally invasive endoscopic procedure designed to resurface the duodenal lining, essentially burning away damaged mucosa and allowing new, healthy tissue to regenerate. It's not a metaphor. The process uses controlled thermal ablation. In a field where treatment usually means lifelong medication, Revita promised a one-time mechanical correction. That departure from pharmacologic orthodoxy made Fractyl an outlier from the start. Years later, the company doubled down with Rejuva, a gene therapy platform using adeno-associated virus, AAV, vectors to reprogram pancreatic beta cells and restore durable insulin sensitivity. Most biotech firms pick a single lane, device innovation or genetic therapy, because the regulatory and operational demands differ completely. Fractyl tried to drive both at once, an uncommon and deeply ambitious choice that made it both visionary and volatile. The boldness of that ambition culminated on February 2nd, 2024, when Fractyl went public on NASDAQ at $15 a share. For a pre-commercial biotech with early-stage data, that pricing was exceptional. Normally, similar listings price between $6 and $10, reflecting uncertainty around clinical validation. The premium signaled extraordinary investor faith, but faith is fragile. Within months, quarterly filings showed barely $90,000 in revenue and a net loss of roughly $70 million, a year-over-year deterioration of about 25%. In a typical post-IPO scenario, companies show flat or slightly improved net losses as IPO